The corporate veil is something you might have learned of when you formed your LLC. It is the limited liability protection that protects your personal assets from the liability incurred by your LLC. But you got to keep in mind that it is not a 100% foolproof method to protect your personal assets. While it is true that LLCs protect your personal assets from liabilities that may occur in the business, there are mistakes that can break through this veil and put your personal assets in danger. In this video, we will discuss what the corporate veil is, how to protect it, and what the extent of its coverage is. Be sure to smash that like button and subscribe for more educational content like this one. Let's get into it. What is the corporate veil? An LLC is a type of formal business structure that protects the owner from personal liabilities like lawyers and creditors for the business's debts. That's why it is called a limited liability company. This coverage creates a legal distinction between the company and its owners and is known as the corporate veil. However, there are instances where the government or court can break through this veil, which leads to the owners of the LLC being held legally responsible for allegations against the company like debts or lawsuits. For example, an unpaid creditor can sue the owners to collect a debt that was accumulated by the LLC. If your LLC has been involved in commingling assets, fraudulent activity, or improper filings and the court proves it, they have broken down the corporate veil, leaving you defenseless and rendering your LLC structure invalid. The creditors will then be able to collect their debts from the personal assets of the owners and members of the LLC directly. How to preserve the corporate veil? There are many regulations you must adhere to if you want to preserve your LLC's corporate veil. Let's walk you through them. 1. You must sign documents correctly. This may not seem like a big deal to you, but it's a vital mistake you must avoid making. Keep in mind that how you sign business documents has to reflect that the company isn't related to you personally. All business negotiations and contracts have to be carried out in the name of the company with the signature of the individual in charge, indicating that they are signing on behalf of the company as an authorized and titled member. This shows that you are not individually responsible for any issues the company runs into. 2. Don't commingle your finances. A common mistake among companies is not establishing a clear distinction between personal and business finances. Your LLC must have its own bank account and credit card and separate transactions from the owner. Owners must not use the company's finances for personal purposes like paying home electricity bills without recording the transaction as a loan or a draw. If the LLC needs more funds and the owner wants to contribute, this should be recorded as a capital contribution. Any such contributions and expenses of the business must be properly documented. 3. Follow an operating agreement. An operating agreement is a document that states the ownership and roles of the members of the company. It also gives your LLC legal credibility. This operating agreement is vital for single-member LLC, as you will need evidence to show the court that you distinct yourself from the company. You must also record significant decisions with a formal document trail to show that you are handling your company's activities separately from your own. 4. Keep your LLC up to date. Failing to file required documents on time, such as an annual report with the state of formation, can result in the termination of your LLC. Some states are particularly strict with this policy. Once your LLC is terminated, you will no longer have limited liability protection, what the corporate veil does not cover. Even if you follow all the guidelines and maintain the distinction between you and your LLC, there are still some circumstances where owners may become liable. Let's go through this. 1. Personal guarantee obligation. If the owner of the LLC signs a personal guarantee obligation for a commercial lease or loan taken by the company, it breaks the corporate veil and leaves the owners personally responsible for such unpaid liabilities. 2. Liability for personal acts or carelessness. There may be circumstances where members, while acting on behalf of the company, have to be personally liable for their actions. If recklessness or carelessness of a member causes injury or property damage, the member and the company may be liable for the damage caused. 3. Liability for taxes. Members of an LLC have to pay their own taxes resulting from working in the company. They may also be liable for certain taxes of the company, like state and federal withholding for employees. To avoid issues, it is vital to properly document company taxes and transactions and adhere to deadlines. Conclusion. To summarize, the corporate veil protects your personal asset from your LLC liability. To preserve this veil, you must sign documents correctly, not commingle your finances, follow an operating agreement, keep your LLC up to date. The corporate veil does not protect you from personal guarantee obligations, personal acts of carelessness, certain tax liabilities. Give this video a like and comment down below if you found it useful. Don't forget to share this video with your friends and subscribe to our channel for more business related content like this. Until next time.